Remember the initial programs? One was the HOPE program the government put out. It was supposed to be a $300 billion program. Under that, banks were supposed to take a 20% haircut off of the appraised value, and then the government would take the mortgage. Well, why would you, if you've already written it down to the appraised value, why would you do that? I think very few HOPE program loans. And the other program that the government talked about was what was sold to Congress, where the Federal Reserve was going to buy lots of market instruments. That never got executed because how were they going to price the instruments? And if the federal government owned all these mortgages, would they be willing to foreclose on everybody? So that never happened. If you think about it, these programs were ill-conceived because they were always focused on the marginal borrowers, not the fundamental housing deflation problem. By the way, banks are very motivated to work with people that want to work with us. We don't want to own the houses, right? So if a borrower will work with us, we'll work with them. One kind of philosophical question: are marginal borrowers really victims? Many of them bought too big of houses. A lot of them became speculators. A lot of them chose pick-a-payment mortgages. I use that example that BB&T didn't do pick-a-payment mortgages, but we saw many people that came in, wanted to pick a payment mortgage, and we wouldn't make it to them, and we said, you need to buy a smaller house and get a fixed rate mortgage. They said, no, I'll go over to Countrywide and I'll get a bigger mortgage. So yeah, Countrywide, you can argue, shouldn't have been doing that, but these borrowers made that choice. How about the individuals who didn't make unwise decisions? I had a little personal experience. My son was out in California during the bubble. He chose not to buy a house. I had another friend out in California that chose to buy 2 houses. He's got some financial problems now. Do you want to bail him out? Interesting question. Moral risk is non-trivial. I was in our BB&T's Mortgage Collection Center in Greenville, South Carolina in the fall of 2008, visiting around, and one of the collectors gave me the phone to talk to a borrower. It was an interesting conversation. This was a man who had moved from the Northeast to retire in Florida. And he'd bought a $1 million house. He'd put $400,000 down, and we'd lend him $600,000. According to him, his house was now worth $500,000, and he wanted us to forgive $100,000 and cut his interest rate from 5% to 3%. Very interesting. And he had $800,000 in the bank. I asked him, I said, well, you know, if your house had appreciated to $2 million, would you send us the check for $1 million? And I don't think so. I don't think so. While they're basically HOPE 1 and TARP 1 really were not executed very well. Back to some kind of general principle. Market corrections are not all bad things. In fact, there's a lot of benefits to market corrections. The world's a better place to live with Countrywide and Washington Mutual out of business. They were misallocating capital. Credit standards were far too loose. We had excessive leverage. We had no savings. Our savings rate needed to be increased. We had an overinvestment in housing, which means we couldn't invest in technology to create jobs. We needed a correction. It's a natural market process. What we didn't need were 2 things. First, we never would have had the magnitude of errors without the Federal Reserve and Freddie Mac and Fannie Mae creating the bubbles that they created. And then we didn't need the panic from how the correction was handled. If you think about what happened, the market was kind of choppy, but then when Bernanke and Paulson went to Congress and asked for $700 billion, we just saw our business fall off a cliff because $700 billion scared people. That was a big number then, and people didn't understand what was going on. The president says the sky's falling unless we do this. And then there was a huge inconsistency. They saved Citigroup, they let Wachovia fail, they saved Goldman, they let Lehman fail. Markets can't stand unpredictability. And all that created a panic and a self-fulfilling spiral down that finally has, I think, reached bottom, but unnecessary magnitude of spiral down. TARP 2 was really the big capital injection in banks. It was designed to create more liquidity in the banking system and may have had some positive impact in that regard. However, it created some really big long-term problems that I'll talk about in a minute. One interesting aside is one of the goals in TARP that people don't talk about was to save General Electric. General Electric is a high-risk lender doing long-term financing on things like airplanes, and they financed it in the commercial paper market. Well, the commercial paper market was locking up, and GE was in serious trouble. And so one of the goals that people don't talk about was to save General Electric. Couple thoughts on the TARP program. One, it was really a ripoff for healthy banks because healthy banks like BB&T had to pay a very high interest rate. We had to pay out options to the government that all were very expensive for money we didn't need, and it cost us probably several $100 million. So in a certain sense, TARP was a ripoff redistribution from the healthy banks to the unhealthy banks. I was personally adamantly opposed to TARP. I wrote Congress, tried to keep TARP from happening, lost that fight. But then when TARP happened, BB&T participated. And the reason for that, we were under intense regulatory pressure. And this really came from the Federal Reserve, and it came from Mr. Bernanke's experience. Bernanke is an academic student of the Depression. And during the Depression, Roosevelt tried to bail out individual financial institutions, and it didn't work. As soon as he bailed out one company, the market figured they were in trouble, so it didn't work. Bernanke didn't want that to happen. There were 3 large financial institutions in trouble in the market, and he knew if he just bailed those institutions out, the market might jump on them. So the Federal Reserve effectively forced, the regulators effectively forced all the $100 billion and above companies to participate in TARP to obscure the fact they were bailing out some companies. And the way they did that's the way regulators do it. There's been long-term standards, probably going back 20 years, for capital in the banking business. Based on those standards, BB&T was very well capitalized. However, we were informed by our examiners that this was a new environment, that they probably needed some new standards. They didn't know what those new standards were, but they were fairly confident that if we didn't take the TARP money, we probably wouldn't meet those new standards. Interesting the way regulators work. TARP has basically been a big benefit for the unhealthy institutions to the detriment of the healthy institutions. One of the real interesting issues is a long-term moral hazard. In my career, Citigroup has failed 3 times. Each time they've gotten, after they've been bailed out, and each time they've gotten bigger and worse. Also, the government's created an oligopoly in the business where there are clearly 5 financial institutions that are, quote, too big to fail. Well, that gives them a huge competitive advantage long term. And this is a very arbitrary oligopoly created by the way mergers were allowed and created during this crisis. So it's not even a market-selected oligopoly. I personally don't believe that these companies are too big to fail. I think they could have been liquidated and could have been dealt with. And I'm also, in general, opposed to antitrust laws. However, if the government has defined these companies as too big to fail, they need to be broken up because they've got an effective guarantee from the government, and that leads to very bad decision making for the economy in the long term. By the way, the Federal Reserve's antitrust policies are particularly irrational. Several years ago, BB&T bought a small bank in the mountains of North Carolina and Tennessee, and we had to divest a $25 million branch. Wells Fargo and Wachovia merged together, creating a $1.3 trillion company, and they had no divestiture. Not very rational antitrust laws. The whole TARP program was detrimental for healthy institutions. It ended the flight to quality. It set up a tough competitive environment in the future and set up an interesting message. The message is take more risk because you can take the risk in the good times, the government will bail you out in the bad times. Not a healthy message for the financial system. What are the possible cures? In short term, the Federal Reserve does need to provide liquidity to core financial institutions. That's what it's set up to do. Otherwise, it needs to let markets correct. It needs to quit bailing everybody out. One of the worst examples to me is the bailout of GMAC, which they've done multiple times now. GMAC is a large automobile lender that created a lot of the problems in the automobile industry. They invented the 100% 7-year auto loan. And what that means is after 3 or 4 years, people owe more on their car than it's worth, so they can't go back and buy another car. There's plenty of financing for the automobile purchasers. We're in that business, and it's tough for us to compete with GMAC because they're being subsidized by the government and making the same kind of mistakes. Cut government spending, don't increase it. This is a really irrational belief, and that is spending money on things that aren't productive will raise your standard of living. It comes from an economist called John Maynard Keynes, who wrote a book that's influenced economics, unfortunately, for a long period of time called The General Theory. And one of the things that Keynes talks about in The General Theory is that What we ought to do is pay people to dig holes in the ground and then pay people to fill them up. That would incent the economy. Now, you really believe that would raise our standard of living? I don't think so. If you want to incent something, cut taxes so the money goes to people that use it the most productively, that will create real jobs and a real improvement in the standard of living. If just printing money worked, then Zimbabwe would really be booming today. Don't introduce any more programs. Restore a cash-based accounting system, all important in the short term.